going to take a look at another current liability, payroll and payroll taxes. Okay, we're not going to go deep into this. I will save any deep discussion for an actual payroll video for a payroll accounting course. Here we just want to graze over the important parts of what payroll and payroll taxes are. So, what we do want you to know in this particular area of the chapter, we want you to know the terms and definitions. Thus, we're talking about the difference between gross pay, net pay, know what FICA taxes are, that's your Medicare taxes, that's your Social Security taxes together, know the percentages for each of those 6.2% as of this recording with for Social Security. Based off of earnings up to 168,600, somewhere around in there. Depending on the date and time of this recording, that could change. So just make sure that you reference the actual values in your textbook for that. So in other words, what we're simply saying is that Social Security is capped off. And so that means once you've reached a certain threshold, you are no longer contributing, you nor your employer are no longer contributing into Social Security. Again, that is as of this recording. Things are constantly changing, so please make sure you reference your actual textbook for the specifics of the amount and the percentage. Okay, but please note that as of this recording, that both the employer and the employee contribute to Social Security for a collective of 12.4%. So 6.2%, the employee contributes their earnings, and 6.2% the employee contributes their earnings, employer employee. Okay, so it's a matching. And then, of course, for Medicare, uh, there is no threshold, so you can make $10,000 or you can make $200,000. Up to that amount, you contribute 1.45%. Again, as of this recording, it could be different. Please make sure you look at the specific amount in your textbook. And then, as of this recording, at this time, uh, I believe that if you make over $200,000, you contribute an additional 0.2% or 0.9%. Again, please take a look at that amount in your textbook for specifics. So there are involuntary contributions and then voluntary. So involuntary are those things that are required to be withheld from your paycheck, and that's typically the federal income tax, the state income tax, and the two FICA taxes. Okay. Now, on the employer side, they are required to contribute to, again, the two FICA taxes and federal unemployment, which we call FUTA, and the state unemployment, which we call SUTA. Now, the specifics about around that just depends on the time, the place, the textbook, and the state. Again, typically most accounting courses don't go deep into that, whether you're taking a financial accounting or college accounting or even intermediate. Typically, we go really deep in that into a payroll accounting, which I have separate videos for that. But here for this class, for what I'm teaching, just know the terms. Also be mindful that all of the payroll withholding or taxes are considered current liabilities. They must be paid within 12 months or less, typically monthly or quarterly, based on the conditions there. The big takeaway, as I said before, the two of them are that you need to know the terms that are within the chapter and you do need to know the journal entries, specifically the journal entry for the employee payroll and the journal entry for the employer payroll tax expense. There are other portions of the chapter for my class specifically. I'm speaking to my students. We are not covering pensions, bonuses, vacation time in our class, but for those who are looking for more information on that, I have separate videos for that in another thread. So that will be made available. But for my class, specifically for what I'm teaching, we're not covering that information. All right. So when we're talking about the payroll entries beyond the terms that are in this particular module slash chapter, I do want you to know how to do the journal entry for the period's payroll. Okay, and so here we have a scenario where our company has $5,400 of Social Security withheld and $1,350 of Medicare, and the total salaries for the company are 90,000 for the period. Here we have retirement savings from the employee checks, blah, 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 all the things, right? So here we want to go ahead and do the journal entries for this. So this journal entry for the payroll, we start off with the salaries expense, which is the total amount that we are obligated to pay to our employees. This is what we would deem our gross pay if we were to give it a name. Okay. Salaries expense is typically representative by the gross pay for the company. Then we have all the withholding accounts, which we call the current liabilities. This is what the company withholds from the employee's salaries on their behalf to pay to these government entities or involuntary and voluntary entities. So here we can see that they've taken out for the Social Security, that is a current liability. They've taken out for the Medicare tax payable, that was given, that's a current liability. Then we have the employee's federal income tax, that is taken out, that's a current liability, and the retirement savings, that is a current liability. And so the 90,000 less all of the withholdings gives us a net pay of $60,030, which goes into salaries payable. On payday, we would then debit salaries payable for the 60,000 and credit cash, which would be a direct deposit to our employees' accounts. Okay. The other one I want you to know how to do is dealing with the payroll taxes entry. So let's say our company has 5,400 of Social Security, 1,350 of Medicare, the 90,000 for the period. But notice that we're talking about earnings are 10,000 subject to the federal unemployment. So please be mindful that only the employers, for the purposes of this class, only the employers are contributing to the unemployment, federal and state unemployment. Now, there's other scenarios where that may be different in different states, but we're talking about the general states. This is how it operates. Again, we'll leave the specifics for another video for another class. But here we're just going to follow with what's given. So with that being said, what does the employer's payroll journal entry look like? Well, the payroll tax expense represents the full amount that we're obligated to pay, and that should be a comma, 7,370, with us contributing to Social Security and Medicare, our matching portion of what is already coming out of the employees' checks, and our obligation, which is the unemployment. Okay, and so remember, unemployment is subject to a threshold, meaning once the employee makes a certain amount, we're no longer contributing to unemployment. So up until a certain point, whether it's 7,000 or 10,000, we will contribute to unemployment. But once the once the employee makes more than that, we no longer have to contribute to unemployment. Okay. So this is what the journal entry looks like on the employer side when they are obligated to pay the payroll taxes. And this is their journal entry.